Hi, Celeste. Can you hear me?
I can hear you. I don't know if it's just Celeste.
Celeste is very quiet, which is unusual.
Good morning, Stuart.
Finally, Celeste, we have sound from you. How are you doing?
My computer is being glitchy this morning. I'm doing well.
I've heard all sorts of excuses this morning. Someone was trying to tell me on a call earlier that the snow in Denver was stopping them from using their video on Zoom.
Now that's funny. I don't think I can claim that.
She said they've had a couple of feet of snow in Denver, middle of April, eh? Crazy.
It's crazy, and the East Coast is just as bad right now. So a late winter, I guess.
Yeah.
So perfect. All right. Well, welcome everyone. You are now attending the de-streaming financial planning workshop. Stuart Hill, who is our CFO for Dermalogica, is actually going to be hosting today. My job is to make sure that if you have any questions in the chat box, that I support Stuart in asking those for you. But please feel free, this is an open forum. Please feel free to use your videos like Jade is. Hi, Jade. Or just unmute yourself if you'd like to talk. It's not that you all have to hide. We're here. We'll be on the entire time. So it's going to be about an hour. Usually the presentation takes about 45 minutes, and then we kind of open it up for you to ask your Q&As. I know there's a lot of stuff going on with what Stuart is going to present. And just so you know, our finance team is very diligent on getting the most accurate information for you and the newest information for you. And then just before I close and send it off to Stuart, we are recording these sessions, and we will be emailing that out to you probably within the next day or two. The first 3 recordings that we did a couple weeks ago, you can find on the dermalogica.com /InItTogether website. So without further ado, Stuart, the floor is yours.
Good morning, everybody. So I think of myself as quite a social accountant, and given that I'm, like everybody else, isolated in my own home, if you do feel comfortable switching on the videos, I think makes this a lot more, a much nicer human interaction. So for those of you that don't yet have your videos on, if you were happy to switch them on and share, that would be great. If for some reason you feel uncomfortable, no pressure. I put on a shirt especially for the occasion. I don't have much call to wear shirts at the moment, but I put on a shirt just for you guys. Delighted to be talking to you. I don't much like the circumstances. Of course, it's a difficult time for everybody, but it's a real honor for me to be talking with our customers, with our skincare therapist tribe. It's a real honor for me to be doing that. Just before we start, because I guess in the beginning there was, people really didn't know much at all, but obviously a lot of time has passed. So I just wanted to get a sense from the group of people that we've got today. And Celeste, I don't know how easy we can do a quick poll. I had 3 questions which I'd be quite keen to get feedback from the group just before we start. I guess the first question is, to what extent the people dialing in are either self-employed, sole traders, own their own business, whether it's just them in their business or whether they have employees. I'm interested in how many people are, let's say, proprietors of a business, and then how many, let's say, 1099s, independent contractors that we've got.
Perfect. So I say, thank you, Linda. Yeah, Linda will take charge. We could put it in the chat box. If you are not a fast typer, not a problem. You can just unmute yourself and let us know who you are and which category you fall into with owning your own business or being a 1099 employee, that type of thing. So Stuart, it looks like, so we do have some sole proprietors. We actually have an instructor that's from one of our partnership schools here. Jade, thank you. We're really excited that you joined, Jade, because you're teaching the future. So I think this is some really great information for them to just understand and for you to understand for yourself. We have someone with hand in stone. So some of this information may not be necessarily relevant, but really great to understand, just so that you know how to help if you wanted to open your own business, or just understanding what you maybe need to do during this time for yourself, if maybe unemployment is the option, that type of thing. April is a sole proprietor. We have someone from Ulta, so kind of same concept as hand in stone. And then we have another person from hand in stone. So we have a good variety of people in different situations, which is really nice, Stuart. So looks like it's actually pretty much equally, where it's about 4 people who are self-employed owning their own, an instructor, right? So good variety.
And next question is, how many of you have already done some form of a cash flow plan or a financial plan to kind of map you through the current period?
So this is a big one. Not a problem, Jade. So I think that this is probably for a lot of you kind of that scary situation, because it's trying to figure out how you're going to pay the bills. But this is going to help Stuart in understanding how much he needs to delve maybe into that specific subject matter, so that if you need a little bit more time understanding.
Linda's asked a specific question about UI in California. I'll come back to that.
Perfect. Thank you so much. Kendra has started an outline, which is great. You got to start somewhere, so don't worry about it. April's done an outline. Nice job, April. Very cool. So it looks like everybody's kind of at that point where they probably have an outline or are starting to think about it. So Stuart, it might be a good note to try to go through that cash flow portion.
Yep. And I think given we're in that window where sort of lots of states are now announcing extensions to stay at home, extensions to closures, I think we all hope that this would be a few weeks, a month, something like that, and we'd get back to normal pretty quickly. I think the reality is that it's going to be a little longer than we thought, and therefore having that plan is probably more relevant now than maybe we thought it was when these things were announced. So I don't think it's necessarily a crisis if you've not done it now, but I would think that it's something you want to think about. And it's not just to get you through until when the doors open again. I think it's also to get you through probably the first 3 months of when the door opens, because I think there will be things that are probably different even once we open than they might have been before. There'll probably be different sanitation and hygiene standards. That might mean that we've got to have extra operating supplies and things like that. You know, if we've deferred payments and things like that, you might all of a sudden find that you've got things that you've delayed from whilst you were closed all of a sudden hitting you. So therefore it's not going to be business as normal. And I'm just a firm believer that even if a plan tells me something that I don't want to hear, I'm better off to hear it and to deal with it than I am to kind of bury my head in the sand a little bit. But I've been there. Okay. And then the third question, and Linda's already answered this, for the business owners, how many of you have applied for either an EIDL, which is the injury and disaster loan from the SBA, and how many of you have applied for PPP, which is Paycheck Protection Program? How many of you have applied for either of those two things at this point?
Perfect. And I know they just opened it up, I believe, for the gig workers and everything this last Friday. So hopefully everybody's kind of looked through that. They have really simplified the forms, which is really nice. Because I know in the beginning it was a little questionable, but they've gotten it down a little bit better to a good science. Okay, Whitney has not. Can we apply for those if we do not have an official business established?
Whitney's self-employed, the answer is yes, you can.
There you go. Perfect.
Because by definition, if you're self-employed, you meet the criteria of a business in the terms of the SBA. And if you don't, it doesn't matter if you don't have employees either. And it's not easy to get hold of, given that everyone's doing it, but it is really, really cheap money. Okay, who else? I had Charlene as a sole proprietor. And April, Charlene, have you two applied for either a PPP loan or an EIDL?
They're probably typing away furiously. Oh, great. April has applied for that, the EIDL, the $10,000 portion, which I think will cover.
The advance, yeah.
Perfect.
Okay. Initially was told you must apply for EIDL to apply for PPP. Yeah, that's not the case. And actually you can apply for both. So if you have applied for EIDL, it doesn't stop you applying for PPP, but you don't need to hold up your PPP just to apply for EIDL. And there's a number of good reasons why you wouldn't want to do it that way. Just in terms of, I'll come on and talk about the differences between the two, but for sure you should not be waiting to apply for PPP to go through an EIDL first. So I'll come on and talk about that. Okay. Thank you very much for the feedback. I'm just now going to flip and share. The host has disabled the participant screen sharing. Hopefully, Celeste, you'll allow me to share my screen. I promise that it's just slides.
Okay, I've given you the reins.
Thank you. I know that's uncomfortable.
It is.
So, can I just get some feedback that everybody can see that okay? Excellent. Okay, so listen, we've got, I guess we've got 50 minutes from now. I will make sure that I don't use all the time just talking. So please stop me at any point to answer questions. I think sometimes asking questions as we go, it's the right time rather than trying to remember what we spoke about at the beginning towards the end. So please don't mind stopping me. I promise you there is no such thing as a stupid question. There's so much information, so much out there, so much in the news that, and actually what might seem like a stupid question that you're nervous to ask might be a question that 3 other people have got. And actually there is just no such thing as a stupid question. So there's no judgment here. If I don't know the answer, my commitment is that I will find out the answer very, very quickly. If I do know the answer, I will answer it here and now. So what we will run through is just a few tips. I will touch on the cash flow plan. I'll run through the federal support packages out there. What that specifically means is the two SBA loans that I mentioned, EIDL and the Paycheck Protection Program. We will also run through the CARES Act, the Family First Bill, and how that applies to your business. That should say state support for California. So each of us in the team has picked up a different state, just so that we're covering different, we're not all covering California, which is of course where we're based. So Lily in the team did the last session and covered Illinois. I should have changed that. I will talk about California. Ambrose in the team covered New York, New Jersey. Tash, who's actually also joining from my team today. I don't know which state she's going to cover, but it will be a state that isn't one of the above three. If we have time, I think that we've had a few questions as we've gone through, people asking about what's a cash flow, what's a P&L, what's a balance sheet, are they kind of all the same thing? If there's any questions like that out there, I'm happy to kind of talk that through. And yes, and I will leave time for Q&A at the end. But like I said, if you have questions, let's pick them up as we go through. So, I mean, I mentioned this at the beginning. I think everybody should have a plan. I'm a firm believer that you need one personally. And certainly you need one for your business. And what we've done is, in the resources that we've shared online, we have built a Excel template, fairly straightforward. We've built an Excel template that allows you to build your own cash flow plan without having to build the model yourself. How does it work? It's pretty straightforward. So you'll see this, it's on the right over here. And what we've done is we've built it by day. My recommendation is to do this by day, just given the situation we're in. We're talking about days, weeks, and a few months. I think once we get through this situation and maybe we get to the end of sort of September time, I hope, fingers crossed, that we're into a period where day and week cash flow is not quite so critical, and then we can get back to maybe more weeks and months. But certainly I feel like, given that the inflows for most businesses have dropped, and there's an element to which you've managed the outflows, really being on top of this day to day is really, really important. And things like credit cards, if that's what you're using, are charging you interest on a daily basis. So if there's a way that you can avoid some of these things, I would really advocate doing it on a daily basis. So simply all you do is, in the top section where you've got the inflows, you just map, what am I getting from services? I don't know whether those are virtual services, virtual consultations, whether you're in a state which is still allowing you to go to somebody's home and perform skincare services. I guess each state and each situation is different, but if you are able to find a way to keep some element of service revenue coming in, there's a line for that. Products, if you're doing drop shipments, so people are ordering from you and you're dropping it off outside their front door. We're seeing actually our skincare therapists really creative ways to keep their businesses going. Particularly on the Facebook professional page, you see people being really creative and resourceful, which is fantastic. Also on here, Dermalogica has introduced an affiliate program. So if you don't have a way of getting product to your customers, but your customers want to buy product, if they go and buy on our website, when they get to the cart at the end of the purchase, it gives them an option to select the salon that they are affiliated with. And based, if they select your salon, then we give you a 30% commission on that sale. Okay? And what we will then do is process that commission for you, and we will pay you the cash. We won't put you We won't stick a credit on your account, which is something that won't buy you groceries or whatever it is that you need. It won't pay you rent. We're not going to do that for every single individual transaction, but either weekly or monthly, depending on the amount, we will pay you that affiliate amount. Okay, so that's another way of, if you are unable to buy and to ship product, that's something we're doing to help. We are also doing home shipments. So if you need products delivered to your house because the business is closed, because you've got products that you want to supply, we're also doing that as well. So as a Dermalogica team, we're trying to help you, and there are just a couple of ways. Gift cards, if you're able to get clients to buy groups of services or things like that in advance and you can get the cash in, again, that's another way of having cash now. But it's also, this is why I recommend that you keep the cash flow going once you've started, because if you forward sold a lot of services, once you get back up and running, you're going to be doing a lot of services for which you've received the cash earlier, and you therefore need to map. So, first and foremost, map all of the kind of the inflows that you get, and then go through and look at all of your, let's call them outflows, cash out. What you'll see in the middle column, cash or bank, is there's a little drop-down menu which says, am I paying for this by credit card, or am I paying for this either via check or ACH, whatever it is, but is it coming from my bank or is it coming from my credit card? And then how the template works is it then shows you what I've spent on my credit card and what my credit card balance is versus what's going through my bank and what my bank account balance is. So you go through and map out all of your costs. And as you go through each one of these, I think the question you should be asking yourself is this something that I can either remove completely or reduce? Okay? Because yes, there's, people tend to be quite open to deferring. I've had a discussion with landlords for some of our, different locations. And when you approach them and say, look, our revenues have gone down dramatically because all of our locations are closed, they understand. And actually, they're quite open to saying, well, if you want to defer 50% of your rent for 3 months, we're open to that. But they tend to be less forthcoming with when I say, well, I've lost these sales. So me paying double rent in 3 months' time, it's kind of helpful for today, but it doesn't help me in 3 months' time. What I'm actually looking for is to reduce my rent full stop 50%. It's a far tougher discussion. But actually, what you'll find is, for landlords in particular, you will not be, they may tell you you are, but it's simply not the case. You are not the only person going to them saying, I've got a problem and I need to reduce my rent. They are fearing of a situation that businesses don't survive and they're going to be left with a load of space that they can't rent, people that have defaulted. So for them, keeping their current tenants in, even on a reduced rent, is more valuable to them than getting into a load of court cases and then ending up with properties that they can't rent after this comes out. So it's not easy. And we have also, by the way, there's a letter, the template that we've put on the resources. So all you need to do is download the letter template and just fill it in for your situation. And I would suggest, depends on the relationship you have with your landlord, either give them a quick call and say, look, my business is in real dire need. I'm going to be sending you a letter, but my intention is I'm reducing my rent. If you know the landlord well, maybe a phone call is a good way to start. If not, then send a letter. If you're a group of tenants in a building, worthwhile speaking to the other tenants to find out what they've done. But just to hear, I heard an example that Staples are not paying landlords. So if Staples can get away with not paying landlords, then I don't know why smaller businesses shouldn't also be trying to negotiate some of these costs down. I mean, in the end, a lot of the courts are closed. So the question comes to, if I really get into a dispute, what's the likelihood that this is going to end up with a load of court cases after the event? You can never say never. I think that's unlikely. What we've seen from negotiating with our landlords is that if you have a really kind of calm, objective discussion. They are open, and you will eventually find a way to negotiate. So, but this is something you need to take on sooner rather than later, because if you wait, you're at your most powerful now while your businesses are closed. If you wait until such time as your business is open again, then it's far more difficult. The other thing is to check the terms of your lease. Some leases have a term which is called force majeure, and it covers you, a specific clause that covers you. It says, you know, for example, if you cannot access your property in relation to a sort of, let's like, it will talk about acts of God, you know, whether it's typhoons and various different natural disasters, pandemics, but some leases have that built in, that actually contractually you're not even due to pay rent. So it would be a real shame if you're paying rent on a property where you have a contract that permits you not to do that. So I would recommend really looking at your lease contract, if that's what you have. If you have a contractual provision that says you don't need to pay, then all you're doing is you're sending your landlord a note just to inform them about that and let them know that you won't be paying. If you don't have that contractual obligation, then again, you're getting into a negotiation. But the sooner you start, the better. Okay? So you've got lines for each of these costs. I would go down and first ask the question, can I reduce? And if the answer is yes, great. Some of them reduce naturally. Utility costs, if your property's closed, there's a good chance you're not using the same utilities as you were. Different taxes, property taxes, different business rates, depending on where you are. Lots of states have come in with schemes to help you with some of those things. So again, look at everything. Insurance, negotiate with insurance. Just be careful that you don't invalidate your policy if you don't pay. I would want to go down the route where I at least give formal communication that I don't intend to pay, rather than simply just stopping. And then, as I mentioned, so go through trying to negotiate stuff down. If you can't negotiate stuff down, then you have the option to ask for extended terms. Dermalogica, we've extended terms for all of our clients. So again, we've given everybody an extra 30 days, partly because, you know, we just don't know how long this situation is going to last for. But again, we don't want to be part of a problem where we see businesses fail because debts become due. So you go through, put in all the costs. Then there's a section at the bottom for your bank account and a section at the bottom for your credit card. And what it allows you to do is see kind of where are my balances at the end of that day. And by doing this exercise and mapping it forward, what you should find is there a point in time at which I run out of cash? And that's the thing you're looking for, right? Is at what point, if something comes due and I need to pay for it, am I not going to have the cash to do it? And by identifying those points, what you then do is you then try to say, okay, and what facilities are out there to help me through that? Yes. We tend to default to credit cards. Credit cards are not bad things if it's 30 days or less, because ultimately you're not paying interest on the first month. You probably get some reward points. They're flexible. That's great. However, the minute you go beyond the first month, you're paying interest on a daily rate. And the interest is far, far higher than you would be getting on a loan. So when you look at this, if you see a kind of long-term, I've got a cash shortfall for sort of 2 weeks, 4 weeks, 2 months, credit cards are a really expensive way of doing that. I would recommend that you look at other alternatives. PPP and EIDL loans are ways of doing that. You can go to your bank and apply for a normal loan. Again, they tend to be higher interest. I would start with the government or state support before I get into bank loans, but even bank loans are far cheaper than credit cards. So this template is there. I think it's pretty easy to use. We got feedback from the team that most people found it fairly logical. Again, if anyone finds it difficult or doesn't understand, please reach out to me, the team, Celeste, and we will try to help you. Okay, so that's kind of the bit I wanted to cover on cash flow, given that a number of you said that it's not something that you've started yet. If at least one or more of you feel like this is something you want to take on, then this has been a successful meeting. I would advise you to just get started. Okay. Any questions on that before I move on to talking about SBA loans? Okay. So, and I'm not going to go through everything on the right, but in the materials that we send you as a kind of reference document, what we've got is a sort of a bit more of a detailed explanation of what is the difference between a Paycheck Protection Program loan and what is an economic injury disaster loan. I am going to go through both of them in detail. I just found that the table on the right is a really nice summary of what the differences really are. Okay, I mean, they're also they're fundamentally quite different. However, the net result is both of them can provide cash flow for your business at a low rate. Both of them also have an element of forgiveness, and by forgiveness it means you don't have to pay it back. So to all intents and purposes, it is a grant rather than a loan. So within the EIDL, you can get up to $10,000 of an advance, and that advance is not repayable. So if you apply for a loan and get approved for a loan, they will advance you up to $10,000. And that $10,000 advance, which you get, I think, within 7 to 10 days of your loan approval, is not repayable. What I would say is that lots of people are applying for 10,000. Not everybody's getting 10,000. People are getting a bit less than they thought, but they are certainly getting it. And an EIDL, you apply directly to the SBA themselves. You're not going through a lending organization. Under 25,000, you don't need collateral. The rate of the loan is a bit higher. It's between 3 and 4%. And it's for the whole year. Okay. PPP is far more formulaic. It's much quicker. So it's delivered through lending organizations. And I'm going to give you a quick update on that. But effectively, you can go to your bank, not the SBA. It has a strict formula on how the amount that you borrow is calculated, and we'll go through that. You don't need collateral. There's no personal guarantee. The interest rate is 1% for a 2-year loan. And there's a formula for which you can get up to 100% of the loan amount forgiven. So you never have to repay it back. The deadline for applying for a PPP loan is currently the 30th of June. Now, I think it's likely they will have run out of money before the 30th of June, if I'm brutally honest, and I'll give you a bit of an update on that. But the limit of that is the 30th of June. The process, by the fact that it's decentralized to banks, the fact that it's formulaic, makes it much, much faster. And also, just to give you an idea, Paycheck Protection Program budget is $350 billion in the US. EIDL is $10 billion. So, I mean, we're talking billions of dollars. So these aren't small amounts, but there's many, many more times the money in PPP. And what we're hearing is a far faster process to access those funds. You can apply for both. There's nothing stopping you applying for both, and we can go through that. But in terms of if I need to get money quickly, I think you stand more chance through a PPP loan than you do through EIDL. But as soon as I had my PPP loan, I would potentially consider also doing an EIDL. So there's 2 different types of loans. I'm going to go through them both. But when we send out the information, this is a useful table just to remind yourself about the key differences. In terms of the latest news, so I was on a call with a lawyer on Wednesday. So this is as of Wednesday. Tuesday, apologies. So if you've got more up-to-date news from Tuesday, I apologize if my news is out of date. What I hear is on PPP loans that 205 of the 350 billion is already allocated. So, you know, almost 2/3 of what has allocated is already been applied for and been effectively allocated to people. They are apparently negotiating a bill for further funds. So the fact that these have been extended, so I would have a reasonable degree of confidence that if the original 350 is used up, there will be additional funds. I can't guarantee it, but I think it's likely. What's I think kind of cool is that they've added to the number of lenders. So there was a big issue around simply being able to get my application in and get it processed. You know, Wells Fargo have even said to people that will accept applications, but you know, you may want to look elsewhere if you want it done quickly. They've added PayPal, Quicken Loans, Intuit, and Square. So those providers are now also able to process PPP loans. And what's kind of cool about them is that you don't need to be an existing customer. So it's not like, you know, if I'm with Chase Manhattan Bank, I need to go to Chase for my PPP loan. Anyone can go to any of those 4 providers. Yeah, so it potentially is a quick and cool way of doing it. One of the questions that got asked was around, do I need to be current on my taxes in order to apply for a PPP loan? The lender is not looking at your tax compliance. What they're looking at is effectively trying to assess how much the loan should be. So you don't need to be current on taxes. However, if you are current on taxes, they will be using, and you're a sole proprietor, then they're probably using your Form C in order to assess the value of the loan. So if you are current on taxes, they will use that to assess the lending. If you are not current on taxes, it doesn't mean you can't get the loan, but you're going to have to go through a process of proving to them how much the value of the loan should be. So you're going to end up with bank statements. You're going to have to show them sort of business accounts so that they can actually assess how much they should be loaning you. So it's not a requirement, but it could speed up the process. Okay. As I mentioned, EIDL has a far smaller budget. And as a result of the smaller budget, what we're hearing is that the SBA is worried it's going to run out of money and is therefore being careful about how much it is advancing people. In fact, Celeste shared with me that they're kind of using a bit of a formula, which is looking at how many employees you actually have and kind of pro-ratering the advance based on the number of employees you have. Because I guess what they want to do is help people, and they want to help people in the right proportion. So this idea about sort of the 10,000, 1,000 per employee, that's something that we've heard. EIDL might also get additional funding in the next round. And the process is longer. Because it's not following a specific formula, it's assessed more like a normal loan. Yeah. So the process is a bit longer. It's all through the SBA, which is making it a bit more of a bottleneck. And the amounts are less. So what I'm not trying to discourage you from is applying for an EIDL. What I'm saying is I think your chance of getting money quickly is higher through a PPP loan than it is through an EIDL. And to be clear, you can use both. If you take a PPP, it's not that you can't take an EIDL. If you take an EIDL, it's not like you can't take a PPP. And the question earlier from Laura is that there's not a specific order. You can do both. Okay. Unemployment insurance, interesting. There was a question earlier about that. So we were talking to the lawyer about this on Tuesday. So for people who are self-employed or for 1099 applications, obviously federally, they have said that those are now open. You can get unemployment insurance if you fall into either of those 2 categories. Interestingly, California and Massachusetts are acknowledging that that's allowed, but they haven't worked out an application process. So if you're in either one of those 2 states, they're not even accepting applications at the moment. Texas is accepting applications, but really has no idea about how they're going to fulfill them. And therefore your application is going to go into a line and it's not clear how quickly that's going to come back. So I guess things are moving so quickly that the administration of this hasn't yet caught up. Okay. So if you are self-employed, you know, you could get to the point where you do use unemployment insurance, but equally, if you're self-employed, you could also be taking a PPP loan. And a PPP loan allows you, and we'll come on to it, but it allows you to pay 100% of your salary, plus your healthcare insurance, plus your commissions, and be forgiven for all of those costs at the end of the period, so you never have to pay them back. I don't know if anyone's had their check yet from the Fed. I know some people at our work have had them. This is the $1,200 check that you should get through the post if you filed taxes either in 2018 or 2019. It's using that information. If you haven't filed 2019, it'll be using 2018. If you have used 2019, in fact, even though I know someone who's has actually submitted 2019, it seems that they've used 2018, because in 2019 he got married and had a child, but yet they seem to have processed it on 2018, which is they've given him the amount that is if you're a single adult, which is the $1,200. So I think it's $1,200 if you're a single adult. I think it's $500 per child. I think it might be $3,400 for a family of 2 kids. I don't know if that's exactly current, but that should be being processed. But it's using your tax return information. So if you've not filed taxes in 2018 or 2019, I think you want to check where your check is, because I don't know how else they're going to get it to you. Okay. Just checking on time. Celeste, how are we doing on time? We got 20 minutes, right? Cool. Okay.
Yeah.
So paycheck protection loans, it applies to businesses with less than 500 people. It is 2-year loan. There's no repayments for the first 6 months. It has an interest rate of 1%. Doesn't require collateral, doesn't require a personal guarantee. Technically, it covers expenses that could go as far back as February 15th and as far forward as June 30th. The advice that we're hearing is if you are hoping to get the loan forgiven, your best chance of doing that is starting from when you receive the first disbursement of the loan. For the 8 weeks following that is when we would advise you to be using the loan. Like we say, the loan can be forgiven up to 100%. The way that's given is it's effectively, you never have to repay it back, which is of course very cool. You have the option, because it's based on payroll. If you've let a number of people go, you do have the option to rehire people if you want to use this loan in order to pay people. And it's a bit of a challenge, because you've got individuals who can apply for unemployment insurance. The extra $600 a week from the Fed makes that balance a bit more tricky, because effectively if you were earning less than $54,600, then actually in California, under unemployment insurance, you're getting as much as you would have got anyway for not working as you would do. So for people under 54,600, they're almost financially better off, unless there was a big proportion of tips or commissions. They're almost better off under unemployment insurance than they would be under this scheme. The lawyer on Tuesday was keen to point out is that if you are applying for unemployment insurance, technically you have to confirm that there is no job for you. If as an employer there is a job for you, so, and again, if you're an employee of a Hand and Stone or an Alter, if those businesses have reopened and there is work for you, technically you can be denied unemployment insurance even if you're better off under unemployment insurance. So, and I don't know how this is going to get policed. So, whilst everything's closed, it's quite straightforward. If you're an employee, you're applying for unemployment insurance. And I think with federal and state, it's a reasonable compensation. They're not asking you to wait 7 days before you can access the money. So if you haven't done it already, you should be doing it. Technically, as soon as the businesses are reopen again and there's work for you, you are obliged to go back and, work. Yeah. You can't say, well, I'm better off. Actually, I'm going to wait until the end of this 30th of June period for unemployment insurance. I'm going to wait for that. You can try that, but you can also get denied. And then you could be in an awkward situation where you're getting denied unemployment insurance and then your employer is rather disgruntled because, they've had to get the work done elsewhere. So you need to be careful.
Stuart, a
Yes.
question for you. Linda was asking, do you need to receive the minimum of $1 a week from state unemployment to qualify for the Fed $600 a week? So I'm assuming, Linda, that you're asking that you do have to be receiving some form of unemployment to receive the $600. And is it $600 flat, or does it fluctuate with how much you make?
It's $600 flat.
Okay.
Because it's all administered by the state.
Mm-hmm.
You need to apply to the state for unemployment insurance. It's then the state's obligation to give you the extra 600. So
Right.
if the state declines you for unemployment insurance, I don't believe they're going to give you the 600.
Mm-hmm.
So you do need to meet the criteria for unemployment insurance in that state.
And is there, I've heard for unemployment that they may cover if you have the childcare challenge where you can't technically work because you have a child at home. Is that a portion of it too?
I don't know if that's covered under unemployment insurance. I think that's covered under the Family Care Act.
Okay.
So the family care, so either your employer has turned around to you and said, there's no work for you, therefore I'm laying you off. If you're laid off, you go for unemployment insurance.
Mm-hmm.
If your employer says to you, I have a job for you, but you are saying, I cannot work because either I myself have been diagnosed with COVID-19 and can't work,
Mm-hmm.
somebody in my family has been diagnosed and I need to care for them,
Mm-hmm.
or if the school is closed and I need to care for my child, if your employer is keeping you on, then that's covered under the Family First Act. And what happens is your employer continues to pay you, and then they get reimbursed for the fact that they continue to pay you. So it's not unemployment insurance, but absolutely there is support for you I think in majority of cases, people are getting laid off. So it tends to default to unemployment insurance. And if you're unemployed and caring for children, that's fine.
Mm-hmm.
If you do have an ongoing job, and then you can be kept on, and then they get support for, I think it's up to 60 to 70% of your salary.
Mm-hmm.
So again, if you're 60 to 70% by being kept on, may be better or worse than having unemployment insurance with the extra 600. Does that answer the question?
I think so. Linda said that some people have had some challenges. Many self-employed said they won't accept another job work because they've got their own business to go back to.
I don't think you have to accept. I think accepting a completely different job.
Right.
I don't know how they could possibly police the fact that you've turned down a job offer somewhere else. I think you start to get into really difficult territory if you have employees and they are refusing to come back. Then technically they should be coming back. If there's a job for them, they should be coming back. The problem is the system's just so overwhelmed. You could find that by the time you get through and get a resolution on that, a lot of time has passed. That's what's making it, I think, a bit challenging.
Mm-hmm.
There was an example actually on the call I was on Tuesday where somebody had 15 therapists, and of them, 13 of them were better off on unemployment insurance than they were working in the salon, and therefore they were all at home not working, getting paid more. The lawyer pointed out that, if you can insist on them coming in, the problem is I just don't know how you would enforce it.
Yeah. How do you I don't know if you can deny it in that capacity.
Yeah.
We do have a question from April, and this is a great one. Are we advised to open 2 separate accounts if we are receiving funding from both the EIDL, that 10K possibility, and the PPP?
You don't have to. I would think it's advisable. The reason is that at the end of this, the EIDL, the forgiveness is up front. So the advance technically you don't need a separate account for an EIDL. For payment protection program loans, you need to apply for the forgiveness after the event. And I think the more you can demonstrate a really clean bank account, which says, here's the money going in, here's the money going out, and this is what it's going out for. The more simple that is, I think the easier it's going to be to then apply for forgiveness. And the way that the forgiveness works is what I apply for is 250% of my monthly payroll. Okay. Now, what happens is if I use 75% of the money that I get to pay salaries and payroll costs, I can use the remaining 25% to cover utilities, rent, all the other costs of running my business. If I get the ratio right between 75%, 25%, I will be forgiven the whole 100%. But the same person who lent you the money is the same person who's going to have to write the loan off. And I think if you've got a separate account and you can show things going in and out, that process by which you get that forgiveness is going to be far easier. If you've got, I mean, you know what it's like when you have accountants or bankers crawling all over. They're going to ask you about every single line, because I guess deep down they're going to probably not want to forgive, right? So I think the more simple you can make it, the better. Any other questions, Celeste?
One more. What qualifies for forgiveness as a self-employed person? And Whitney, I'm thinking that you're talking about that PPP portion.
Yep. So PPP, let's go to what counts as payroll. So if you are a sole trader, this is what effectively your tax return looks like. And then you will see down here as part of your Schedule C, your net earnings. So if you're a sole proprietor, your net earnings is what they would call to be your sort of, let's say, divided by 12 would give you your average earnings. Yeah. So that would be your monthly payroll amount multiplied by 250% gives me the amount of the loan that they would give me. Because so if you've got no other people, now if you also, yeah, it's well, you're not a sole trader if you have other people. So 250%, that gives you the loan. If you then use that loan to pay your, let's say, I think we might have an example. So let's see here. You'll see at the top, my Schedule C says 72,000. It's an average of 6,000 a month. That means I can get a potential loan of 5,000. Okay. If I use 12,000 of that to pay my own salary, I can use the other 3,000 to pay rent, to pay bills, to pay other items. And I can then go back and all of that 15,000 will be forgiven. So at the end of that 6-month period, I won't have to pay back any of that 15,000. Now, I could choose to take unemployment insurance. I can still take the loan. I could choose instead to take unemployment insurance. However, the problem I then have is that I won't have any payroll costs for my PPP loan. Therefore, the forgiveness will be zero because I still need to maintain 75% payroll to 25% utility. If I choose to just use it for cash, by the way, I mean, a 2-year loan at 1% with no repayments for 6 months is a really, really good loan. So you might decide you still want to use it to run your business, but the forgiveness of it will be zero. Yeah, so either you're using it for payroll plus the 25% where you then get to forgive them a lot, or you use it as a straight loan.
Perfect. And then Linda asked a great question. Can we include our medical and dental insurance costs as payroll?
Yes.
Perfect.
It's
So
everything. Salary,
everything.
wages, commissions, healthcare benefits. It's the whole lot.
Perfect.
And it means you can pay the whole lot.
Mm-hmm.
And that's the great thing is you look at commissions on an average. I mean, these are all done on averages. Now, again, if you're a new business, normally what it would be is it taking the previous 12 months and taking an average. If you're a relatively new business or you've expanded, they will look at January and February and take that as a run rate. But it's everything included. And that's the great thing, is for a period of time of 8 weeks, you can effectively fund your own salary and your business costs for 8 weeks and never have to pay it back. This is what's so appealing about this particular loan.
Perfect. And then Linda asked, that's for a sole proprietor. I believe for the PPP, you can do it as a sole proprietor. You can do it as an incorporation,
Yeah.
an LLC, basically all of the above.
Yes, and all it would happen is that you need to work out what your payroll costs are. If you've got 3 or 4 people, you just then need to map out for each employee, how much do they cost me, and then work out what my average amount is. Then I guess if you've got multiple employees, when it then comes to paying, if half of the people are on unemployment insurance and you're not paying, the forgiveness, because you may have got a loan for 100% of people, but you're only paying 50%, for example, you can still pay those 50%, you can get forgiven, and then 25% on top, you can then cover rent, utilities, but the half of it that you're not using to pay the people on unemployment insurance is a loan. Now, at the end of that period, you can just pay the loan back, right? You'll be charged 1%, which is relatively cheap. You can just pay it back. Or you can say, well, do you know what? I've got a sticky period coming up. I'd actually like to keep it because of 1%. I'm not going to get a 1% loan anywhere else. You know, you really won't get a 1% loan anywhere else. Therefore, I'm just going to hold on to it. I also would see the value in doing that. You hold on to it to kind of underwrite cash flow, pay off credit card debts. I mean, using a 1% loan to pay off something which you could be paying 15% APR on makes real sense. Now, it's funny, people seem to be a bit more emotionally comfortable with having credit card debts because they can pay it back anytime, as opposed to a 2-year loan. I think in this situation, there's a real discrepancy between the different costs of the 2 options.
Perfect. And then one more question.
Yep.
Can't you keep the PPP forgiveness as long as you rehire employees by June 30th?
So, because I also had this question, you need the forgiveness at the moment is up to June 30th.
Mm-hmm.
So, you know, you need to apply. Actually, let me double check. The application date closes. So if you've not applied already, like my question was, actually, interestingly, let's say the salon's open again mid-May, and I get my PPP loan mid-May, then I can actually use my PPP loan to pay my normal salaries for an open salon for an 8-week period and get forgiveness on that loan. So I can actually pay for it when I'm up and running. The feedback we've been given is that the forgiveness starts from when you get the loan. So it's not like you can hold on to it for 8 months, then start paying people and then get forgiveness. It doesn't work that way. So I think you need to get the app. So I think the forgiveness period ends at the 30th of June. So you need to get the loan, get it in. You can still keep the money, but the forgiveness period, you will have missed the opportunity to get forgiveness because it's specifically designed to keep people employed between now and the 30th of June. That's what it's designed to do. That's the spirit of what it's doing. What it's not trying to do is give a load of business people money that the government then supports with UI and then they use it to fund their businesses. That's not the design. The design is to keep people in employment now. Have I answered the question, do you think there, Celeste?
I think so. And then the other question would be, can it be used to back pay people?
Technically, yes, because it's from the 15th of February.
Right.
And I don't know the reason, but I've heard 2 lawyers and an expert on these loans saying that backdating is really difficult.
Okay. So really, because I think a lot of people are running into the challenge of that, you know, they put in for said loan right when it opened, but it's still taking a couple weeks to get it going and get the funding for it. So what they're trying to do is keep their employees working and hoping that once they get that money, they can then pay the employees for that kind of gray area in between.
My guess is that would be all right. If you're genuinely keeping employees going whilst your business is closed, this is exactly what the loan's designed to do. I think that going back to February when businesses weren't closed and there was revenue coming in, I think that's the period that's a little bit controversial.
That makes sense.
I think if you're genuinely keeping employees going now whilst your business is closed, waiting for the loan, for me, that's the purpose of why the loan's in place. And depending on when you get the loan, it may well be if the 8-week period from when you get the loan carries you into when your business is open again, I don't know why payroll costs then wouldn't be relevant.
Right.
I think if you're a sole proprietor, unless you're so much better off as a result of unemployment insurance with the extra 600, for me, PPP is a really, really good option because you can pay yourself 100% of everything, commissions, all employee costs, and you never have to pay that back. And it allows you to then pay things like rent or mortgage or the other business expenses that you have that maybe you're not able to avoid. So for me, if it's just you, it makes perfect sense to do it. If you've got multiple employees who are all better off on unemployment insurance, that's when I guess it gets a bit tricky, and maybe you take the loan, you pay yourself, and then you hold on to the remaining of the funds. Maybe you need it and it's a good funding, or if you really don't need it, you have the option to pay it back.
Very true. I think we're going to start wrapping it up because it is 11 o'clock, but we do have a good question.
Yep.
Could the 25% cover product cost for Dermalogica products? How extensive is that 25%?
I don't think it covers inventory. Hang on a second. Let me just check. The EIDL does. I don't believe that PPP does, because it's designed to keep people in work.
Right.
So the whole purpose of it, you can use it to pay Dermalogica if you want, but you won't get forgiven by the SBA for that. It's designed really for around people and business expenses.
Right. So business expense would be more towards your rent, utility cost.
Exactly.
That type of thing, rather than, oh, that was the perfect slide. Go right back to it for me. There you go. I think that one is.
An EIDL absolutely can be used for that, because once you get the advance, nobody's checking what you're using the money for. It's a grant up front.
Right. Perfect. So yeah, so everyone, just so you know, I will send out the presentation that Stuart did in all of its wonderful information. And then we'll send the video back out. So give me about a day and I'll make sure it's all up and loaded for you. And that, I think, will help so that you can kind of pick apart exactly which either loan or unemployment, whatever is going to work best for you. What's great about the finance team at Dermalogica is they have opened their doors and their emails. So on my email, you'll see their email addresses. Feel free to email them and then put me on the email so that I can make sure that you are all taken care of. Any questions you have are answered. And we're really, really thankful that you guys all joined us today. I really hope you got some really awesome information. Stuart, is there anything else you'd like to add?
Yeah, I'm conscious we spent a lot of time talking about PPP loans. We didn't talk so much about EIDL. I did cover that at the beginning. It is a good source of a loan. You can apply for both. It's just a slightly longer process. You apply directly to the SBA. But I think that you should definitely look at that. The one thing that I didn't cover is, I think, the thing on Families First Bill, which is a law that applies to all businesses under 500 people. Just want to be clear, it's not an option, it's the law, okay? And what the law basically says is, if you have an employee who requires sick leave, either for themselves, then they will get 2 weeks paid at 100%, or to care for either a child who's because of a school closure, or because they're caring for someone else who's sick, they would get 2/3. So as the employer, it is legally binding on you that you need to pay sick leave for anyone in that situation. Okay. Now, the government are giving you that back in terms of, so when you pay your payroll, your employer payroll taxes, you can deduct that money straight back again. But it is a support there, but it's more a support for employees working in small businesses and a way of funding it for the business owner. So again, it's just remember that this is a law that, you know, that you as an employer have to comply with. Now, of course, if you've laid somebody off, then they're no longer employed and that doesn't apply. But if you are keeping people on and they need sick leave, you're obliged to support them. And again, in the case of Hand and Stone, which I believe is more of a franchise operation, each Hand and Stone franchise owner would be obliged to provide this. Alter is significantly more than 500 people, so would not be. So that was the only thing that that we didn't cover.
Okay.
I'm happy to take any other questions. I'm conscious that we ran quite short of time there in the end. Nothing's more important in my day than this. So if anybody does want to answer any more questions, I'm happy to take them now.
Perfect. And then again, if you have questions that you're kind of noodling on, we will send the email out. You can send an email to any one of us and we'll make sure that your questions are answered. Or maybe if you've gone through the presentation on your own and you're like, oh, wait, I needed to ask that question, feel free to do that. And then what's great is that we have done this session a couple of times before. So some of that information that Stuart may not have pinpointed on in this session, you probably can see it in a previous session.
I think the one thing I'd say is that with each session, we learn a bit more.
Mm-hmm.
So what you know, if you watch the first one that I did, there's a whole bunch of stuff that I talk about now that I just didn't know 2 weeks ago.
Right.
So hopefully we're keeping you more up to date as we go. And as Linda's just mentioned, we're doing these twice a week.
Mm-hmm.
So, you know, by all means, dial in next weekend and see what's new. Maybe dial in at the beginning and, you know, maybe some of the stuff you want to drop out for, but we're really happy to keep the dialogue going.
Very much so. And then Whitney, I believe we do have everybody's emails in our registration database, but if you feel that that email is not current anymore or anything like that, feel free to put it in the chat box and I'll make sure that the database is updated with your most current information. Other than that, Stuart, thank you so much again. Nice to see you, Tosh. All right.
Thanks, guys. Good luck.
Have a great one and reach out whenever you need to. We're in it together, everyone. Have a great one.